Ken Armstrong. I'm the president and CEO of Westhaven Gold Corp, and thanks for taking the time to listen to this corporate update. I'll just take you through the work we're doing in the Spences Bridge Gold Belt and what we think is a pretty compelling development opportunity at our Shovelnose Gold project. As I take you through the presentation, I'm going to be making some forward-looking statements, so please keep that in mind. We're talking about a potential gold development and the exploration upside that we see associated with the project. So it's an important reminder for you. In terms of investment highlights, I think really Westhaven is what we think is an undervalued and really an underappreciated junior gold story. We have in our Spences Bridge Gold Belt properties development opportunity to build out a high grade, high margin underground gold mining opportunity about 30 minutes south of Merritt. We have tremendous exploration upside that we see within the property near the mine site, but also along the entirety of the Spences Bridge Gold Belt on our other properties as well, taking advantage of the infrastructure that we have in the area and the location and its history, which I'll touch on as well. Including myself, we have a new leadership team that has the skill set to advance the company along this development path and the exploration path, and also have added to our shareholder registry some important shareholders that'll help us with that exercise as well. So just in terms of management, I'm not going to go through the background of everyone involved, but really the names that you see on this slide in gold are new to the company. I joined in May of 2025. We have a new CFO in Zara, VP Exploration and Robin, and collectively the three of us have worked together on different projects in different areas in North America and globally over our careers, and we're well positioned to advance the company. We also have really good advisory capacity now with Allison helping us on the ESG and the Indigenous engagement piece, which is so important as we get on the development track, and from Fraser when we're looking at the technical side and developing and really redeveloping our exploration model at Shovelnose and in the Spences Bridge Belt. And a lot of this changes has happened since Ira Thomas joined the board as chair I guess just a little over a year ago now. So a lot of experience on the management side and on the board side to help advance the company. I mentioned a couple of new shareholders, both Eric Sprott and Rob McEwen are new shareholders over the last 12 months within Westhaven. We're sitting just under 250 million shares outstanding, and at the end of June, we had just under 3.5 million Canadian dollars. Since then, we closed financing just over $3 million, which brought Eric Sprott in, as well as Earth Labs as another new important shareholder for us. And we're well positioned financially to advance on the work that we have underway and to realize on the potential that we see here. So I talked a bit about location. Our properties, we have four of them within the Spences Bridge Gold Belt, which basically follows the Spences Bridge Volcanic Belt in southern British Columbia. That belt is sort of that ghosty gray color that you see in the center of the map, and our properties are the dark blue areas on top. We have the four of them. Shovelnose is our flagship property. It's the property that hosts the resources that are the subject of the preliminary economic assessment that I'll be talking to. Shovelnose it's 2.5 hour drive from downtown Vancouver, a very easy drive on the Coquihalla Highway. It's 30 minutes south of Merritt, an excellent location to get to. It's a kind of easy access that you just don't see very often when it comes to resource development stories in Canada in particular. But it's also an area, southern BC, that has a long history of exploration and mining, and I think that's really underappreciated. It's a region that has active mines with New Gold and the new Afton mine. Teck has been in operation at Highland Valley for several decades now, and the Copper Mountain mine at Hud Bay that Hud Bay is operating. But really, mining has operated here since the late 1800s. Why that's important. It shows that it's a region where you can permit operations, you can operate, and it means that the local communities appreciate the benefits and understand the benefits that mining can bring, as well as an understanding of the potential impacts that mining can bring as well. So it's an excellent location. I like to compare it now to the Golden Triangle. I think when we think of British Columbia, the Golden Triangle has been the best marketing that's happened, and it's an area that people and a region that people know very well. I think southern British Columbia, and this area of southern British Columbia in particular, rivals the Golden Triangle in terms of history, in terms of potential and operating mines, without some of the infrastructure challenges that we see in the northern part of British Columbia. So, as I mentioned, Shovelnose is our flagship property. It is the one that has seen the most exploration work. This is sort of an oblique view looking north. You can see the Coquihalla Highway clipping just the northern edge of the mineral claims. The power line that you see running along the northern boundary of the claim block is actually the main power transmission line that connects the interior of British Columbia with the lower mainland. But there are also power lines that then extend off that and up onto the property. And in fact, there's a power line and a right of way that runs onto the property and all the way up to the top of Shovelnose Mountain that is right beside where the resources are located that are the subject of the PEA. So excellent infrastructure on this property, easily accessible. There's a whole network of logging roads, over 400 kilometers of roads on the property from past logging. It is easy to get to, easy to operate, and we think it would all of that would help add to a lower cost of development, as we see in the preliminary economic assessment that was released in March of 2025 by Westhaven. So this is a zoom in of the property. It's sort of the rectangular area that we saw on the previous slide. It's where all three of the resources are located. It's where I think it's over 92% of all the drilling on the property is located within this area, and where the PEA is focused in terms of its evaluation. I would just point out that I mentioned the power line going up to the cell tower at the top of Shovelnose Mountain. That is located actually immediately just to the west of the dry stack tailings label that's on this map, so kind of right in the upper center part. And the other important things that you see here are the development areas for the three resources. So there's a south zone, which is important. It's over 80% of all of the ounces that have been defined so far. And then the FMN and the Franz developments just off to the northwest. The PEA was important. Obviously, it's an opportunity to wrap economics around what's been defined so far. The PEA does include inferred resources, which is an important thing to keep in mind when looking at and understanding the results of the study. But what it has done is it's allowed us to bring the Franz and the FMN satellite deposits into the development timetable. And by doing so, both of those deposits are located right at surface. So by bringing them into the schedule, it actually brings production forward by 12 months, which has a really important impact on the overall economics that are outlined in the PEA. And so in terms of highlight numbers, I think important numbers and metrics to keep in mind. This was done at a $2,400 per ounce gold price, US dollars, a $28 per ounce silver price, and basically a 72 cent Canadian dollar. A lot of the numbers I'll talk about are just the gold only numbers, and one metric just to keep in mind is basically the silver adds about 5% in terms of value and production from the overall story, but it really is primarily an epithermal gold mineralized system. We're looking at in the PEA just over $450 million after-tax net present value at a 6% discount rate. The internal rate of return is over 40%. It's just over a 2-year payback period and an 11-year mine life on 1,000 tons per day of production. Really important metric is the pre-production capital cost. It's under $200 million Canadian, which is very low. We think that really reflects the fact that we're in such an accessible location. There is no big infrastructure project that needs to be developed and permitted in parallel with the mine construction itself. We don't need to build a road. There's no power line infrastructure required. It's really taking advantage of location here. The all-in sustaining cost is another really important metric at under $850 US an ounce. And we're looking at 56,000 ounces a year of gold production from the mine plan that's in the PEA. We'll come back to that number. We think it's a really important metric as well, particularly when just highlighting the margins that we see in this deposit. Mentioned that the South Zone hosts the majority of the ounces. Importantly, over 70% of the ounces are already in the indicated category. So when looking at this as a PEA, and an important metric to keep in mind is that again, over 70% of the ounces are already indicated. So there's not a big infill drill program required to realize as we advance towards development and feasibility here. And then really important tax benefits to the province of British Columbia and other governments through the jobs and just the overall operation going forward. Some of the other metrics that we like to look at with a PEA are on the slide. I would just point out in particular the gold grade at 5.2 grams per ton. So that's the diluted grade that's used in the PEA. The resource grade itself is over 6 grams per ton. And in terms of recoveries, we're looking at over a 90% recovery for both the gold and the silver within this study itself. And that's on the basis of metallurgical work that's been done on the South Zone as well as on FMN, and is key in showing us that the gold here can be recovered using conventional gold extraction technologies, cyanide leaching processes. There's no flags, and that's a real metric when we look at the overall engineering aspects here. It's a portal and decline access to all three deposits using long hole retreat mining methods for the mineralized areas for the most part. And that's in big part because the mine widths are actually quite wide. Within the South Zone, we're looking at mine widths of 15 meters up to over 30 meters, which allows us to look at long hole retreat mining methods. And also helps reduce the cost of mining when we're underground. This underground access model that's been used in the PEA is the most cost-effective way to mine this deposit. We looked at open pit mining, but going underground actually is most cost-effective, again, because of the size of the mining widths and the orientation of the deposit. It allows us to look at paste backfill for tailings disposal as well as dry stacking. We don't have to come up with an area to put all of the extra waste that would come from an open pit. And frankly, it helps with our engagement with local communities and First Nations on what the potential impacts of the mine development would look like. But it's a high, as I've touched on, it's a high margin type operation, and that's really important to keep in mind. When we look at the overall margins and the after-tax free cash flow that will be generated over the 11 years of actual mining within the mine plan, we're averaging between 80 and 100 million dollars Canadian of free tax cash flow each year. I think we peak at just over 120 million dollars in year 7. And again, this is using $2,400 gold. So we don't need a gold price of over $3,000 to make this look attractive as a high margin potential development. It really works on its own merit and is really, we think, pretty self-explanatory and when looking at the opportunity. And it's something that we want to try and show compared to some of our higher profile comparables. When we look at comparable developers or sort of pre-development type stories that have PEA or PFSs that have been published since 2024, largely trying to look at underground operations. If we look at a metric like what the annual after-tax cash flow per ounce produced is, Shovelnose compares very well, almost $1,300 Canadian ounce on this basis. And we think that reflects, again, the low cost nature of this development, but also it helps highlight that at 56,000 ounces a year, that's pretty good. We don't need to necessarily hit that 100,000 ounce a year sort of threshold or target that we often hear about for Canadian development stories. That target, we believe, is sort of used when evaluating development opportunities, largely because there is a bigger capex that's required in order to get it into production. There's sort of a big infrastructure project that's required in order to get that deposit into production as well. We don't have that, so at 50,000 plus ounces per year, this is a really attractive development story, and it's something that we need to continue to advance on. Just looking at sensitivities that help just to highlight this. This is straight from the PEA itself. Again, we use $2,400 gold. I think the main takeaway here is just that for each 10% change or in the price of gold, the net present value changes by about $84 million Canadian on a 6% discount rate after tax. That's just a nice metric. So at current gold prices, it's a very robust NPV that we'd be looking at. So the next steps when we look at the development opportunity that we see at Shovelnose is clearly to get it on a development track. So we're working on an integrated schedule right now. We're looking at what are the engineering pieces that we need to do, the environmental work, stakeholder engagement, fitting that all into a permitting schedule so that we can come up with a realistic and an achievable timeline with an associated budget on how we can get the Shovelnose project into production and really to get it to what I'd call an investment decision and what is the time frame that's going to look like. So we've been working on that over the last 4 to 6 weeks. That work should be done in the next 4 weeks or so. And we'll be looking forward to sharing that with the market as that'll form a big part of what our next steps are on this development track. First Nations engagement is critical for any development in British Columbia. We've been working hard on that this summer, engaging with the local First Nations on whose traditional territory the deposit is located. And then the other part that we're working on, along with some exploration drilling that I'll get into, is the development of a new exploration model or a revised exploration model that will help us realize on what we see as really the tremendous upside at Shovelnose and within the belt for new discovery. We've identified 3 epithermal deposits on Shovelnose so far. These sorts of deposits typically occur in groups within much larger vein systems. And a way to sort of show that in a diagram is to take a look at our 3 deposits. They all kind of lie along this northwest trend. And really what we see is that these deposits lie along a structural sort of epithermal vein system that's been defined over about a 4-kilometer trend. And when we compare what we've seen so far to other epithermal systems that have been identified and brought into production around the world, is that we have a single discovery right now. And that's how these sorts of systems often start, is with that single discovery with a single vein system. But there's usually much more to those vein systems. And so now we're at the point where we need to come up with a model to try and find these additional systems. And this slide is kind of comparing what we see at Shovelnose to the vein systems at Krakow and Gossawong, which are larger systems that started with a single discovery of sort of 500,000 or 800,000 ounces and then expanded into where they're at now. So we're using examples like these 2 deposits and building on the knowledge that's been developed at these sort of global epithermal districts so that we're able to expand our own search space within Shovelnose as well as along the entirety of the Spences Bridge Gold Belt to test new targets and come up with an expanded vein field. So I'll kind of take you through what we're doing, and there's sort of 2 components to this. One is looking at the structural setting, which is really important for finding these vein systems, and then we'll kind of layer on top of that the mineral alteration that we see and the geochemistry of the Pathfinder geochemistry that we see, as well as the veins themselves. So structurally, what we see again is this northwest trend runs through the 3 deposits that we've defined so far. This trend really is a normal fault system. We picture it being sort of a half graben type environment, and there's a little cartoon on the left side of this that shows sort of dropping to the southwest would be the downside on the fault, and that's the kind of displacement that we see along the trend that we defined at Shovelnose. Those faults can be a conduit for epithermal fluids, and then you can get a localization of mineralization along these. So first stage that we're doing is looking at where can we identify sort of sub-parallel northwest trending basin bounding faults that are like the main trend along which the 3 deposits have been found. With the drilling that's been completed so far, there's some areas where we have constrained where additional sub-parallel sort of basin bounding faults will be located. The current drilling is doing the same thing, and that gives us sort of a first stage vector to look at. The other key part that we see is that these northwest faults are then impacted by northeast trending, sometimes more north trending faults that can act as sort of relay structures or linkages that connect these northwest trending normal faults. These themselves can show these northeast faults themselves can show some strike slip and some sort of up and down movement, which can help us with targeting. So we want to look along the main Shovelnose trend and look for additional areas that have been impacted by these northeast structures, but also look at the additional subparallel, northwest trending, basin bounding faults, and where they would potentially be impacted by these northeast structures as well, and are influenced by them. And those become sort of immediate target areas for us to focus our work. And then once we've identified these areas, we can layer on the use of clay alteration and geochemistry and veining. The nice thing about low sulfidation epithermal systems is we have a pretty solid model on how they develop. But in the case of Shovelnose itself, we actually have a preserved model of what one of these deposits look like, and that is the South Zone at Shovelnose. It is a fully preserved epithermal shoot or system or deposit or however you want to characterize it. I think it's fair to point out that I think one comment that we hear about Shovelnose is that it's a heavily glaciated area and therefore everything is eroded and there won't be any more discoveries possible. And that's simply not true. South Zone is fully preserved. It gives us the base of the system, the main mineralized system, and the top of the system that doesn't have as much gold mineralization in it, but has all of the alteration pieces that we want to see. We can use that to determine what is sort of the size, the physical space that the South Zone takes up in order to target our exploration. And then it also allows us to look at the structural areas that we talked about on the previous two slides, and then now layer on what do we see in terms of clay alteration, geochemistry, and veining. So clay alteration, these clay minerals, they're just minerals that form from the epithermal systems. They come up a structure, they alter the existing rocks, and you get these clays, and you get very specific clays depending where you are in the epithermal system. So adularia is really what we see right in the heart of the South Zone, right where the gold mineralization is and the resource is located. Below that, we see potassium feldspar crystals within veins, which is really important. I think it's been a well-documented story how Peter Fischel, our chief geologist at Westhaven, in the early days was looking at results of drilling within quartz veins, seeing these potassium feldspar crystals, and realizing from his past experience that that meant we were below the system and needed to drill upwards and above where those current drill holes were. And that's how the South Zone was discovered, by drilling above where he was seeing these crystals. In terms of being above the system, we'll see illite and kaolinite. So they're just other clay minerals that are very diagnostic of being above a potentially mineralized system. If we see illite only, we may be off to the side. So these are indications when we look at the actual minerals we're seeing that could give us an idea of where we're at in the system. In terms of veining that we see, again, if you're right in the heart of the system with where that adularia is located, we'll see kind of those classic cauliform, crustiform, banded quartz veins. Plus, we'll see the gold in the assays. Below that, we see a more crystalline quartz. We see the introduction of calcite or carbonate veining. That tells us we're low in the system. If we see just quartz stringers, and they can be kind of banded with sulfide minerals and very narrow, almost hairline marcasite stringers or fractures, that can tell us then that we're above the system, because that's exactly what we see above the South Zone. And then the third piece that I've talked about are these pathfinder elements. So these will be other elements that are carried by the epithermal fluids that drop out into minerals at different places as they move away from the boiling zone, which is in that boiling zone is really where the gold gets deposited. So again, if we see the adularia and the crustiform quartz banding, we will see gold as a primary pathfinder. It's the best pathfinder, obviously. Silver, tellurium, these sorts of things. Then we're right in the heart of the system. If we're above the system, we'll see other elements that often you'll hear us talk about, like arsenic and antimony, molybdenum, cesium, those sorts of things, mercury. And we know then what elements, what the amounts of these elements we want to see that might tell us that we're above a mineralized system, very specific to Shovelnose, because we're using, again, the South Zone as our primary model. So if we're seeing 10, 20 ppm, even higher values in terms of arsenic, we then know if we're right where one of these structures are located, and we're seeing these sorts of pathfinders, and we see maybe some clay mineralization and marcasite stringers, that we need to drill below that. If we see lower amounts of those elements, lower values of including maybe tungsten and antimony, arsenic still, then maybe we're off the side, and that might be helping us just define a broad corridor. So we can use this model now to look at a property scale, look for areas where we have these northwest trending normal faults or interpreted faults or constrained, or in some cases we have them now defined, maybe where they're influenced by these later or sin movement northeast trending faults. and then layering on our mineralogy and our geochemistry. So here we just see it's kind of a schematic way, but areas where we think we're seeing some of these parallel northwest trending faults, we can layer on. In this case, we're looking on the right side, we're looking at a gridded image of antimony from rocks at surface. So we see these really high pink areas where they overlap with some of these interpreted structures. Those are targets. Those are areas that we need to be drilling to look for that next discovery. So, where some of our disclosure we've called these sort of step change targets. It's really just a term we're using to get away from that more incremental approach of drilling and really looking to try and make new discoveries. So these are some of the on that antimony gridded image, just showing some of the targets that we've come up with. Some of these have been evaluated and drilled a little bit. Some of them need more drilling. Absolutely, and particularly in the context of the new model that we're developing. The Franz offset up in the northwest, just to the west of the Franz deposit, is a target that we drilled early in the current drill program. And just in our MD&A, we outlined the fact that we did confirm that offset was there. It confirmed that idea of the structural model that we've come up with, and we're now coming up with follow-up holes there. There's drilling that needs to be done at the hydrothermal Breccia 2 target, that HBO2. Again, with the drilling now, we have confirmed that we have one of these normal sort of basin parallel faults defined there, and we need to do additional follow-up. And we will be looking at drilling areas like at Kirton and Mick, where we're seeing really good quartz veining evidence at surface. In some of the previous drilling, we're seeing the pathfinder elements we want. We see the right structural setting. In the case of Mick, we see some of the highest gold grades that we've seen outside of the main deposits that are part of the resource. I think the takeaway I want to leave you with on this is we're looking at current drill program. It's about 5,000 meters of drilling is planned. That program is going to run through till and likely into November, because we can stretch out the drilling well into the fall with where we're located. But we're going to carry on with drilling these targets, but we have no shortage of targets to test from the process and from the development of this model. And there's certainly going to be more work and more drilling to be done that goes beyond the current drill program. And we can now take this model as well and look at the entirety of the Spences Bridge Gold Belt. This is sort of a revisit of the map that we looked at earlier on. And I think the main takeaway here is that we see low sulfidation epithermal gold mineralization along at least a 75-kilometer strike extent of this belt on our properties, extending from Skunka all the way down onto Shovelnose, and including our PV, or our Prospect Valley property. This is a belt scale opportunity. We have no shortage, a set of ideas on Shovelnose itself of areas to drill, but we also want to get drills onto our other properties. And when we look at the other three properties at Skunka North, we highlight stream silt sampling that's been done by Westhaven, seeing exceptionally high and highly anomalous gold values in stream silts that compare very well to Shovelnose, and kind of how Shovelnose started in the first place. I mean, we're pointing out the Shovelnose stream silt of just under 2,000 ppb, but I would point out that when the original claims at Shovelnose were staked, they were staked on a stream silt anomaly. I think it was about 68 ppb in a government database, and that's what ultimately led to the discovery of the South Zone and FMN and Franz, is following up those sorts of stream anomalies. At Skunka and Prospect Valley, as we saw on the previous slide, we have epithermal quartz veinings. Some really exceptional gold mineralization has been identified on these properties. We've had crews on these properties this summer. We're waiting on assays, and we'll do follow-up work. And the idea here is to get each of these properties basically dressed up and get the table set so they are drill ready. And we can then look at how do we realize on the potential that we see there with exploration drilling on these properties. And do we do that ourselves? Do we do that in a joint venture scenario, or do we spin out our own exploration company and evaluate those? Those are the kinds of ideas that we're contemplating, and the work that we're going through right now. So if we look at our catalysts going forward, obviously the development track that we see that Shovelnose should be on is a really important one. So getting that integrated schedule of engineering and permitting and environmental work mapped out with a budget on a timescale that's achievable and realistic is an important piece. We're very close to finishing that work right now. First Nation engagement is ongoing. It's obviously very important for any project in British Columbia, and we're making real progress there. all of which will be heading towards getting us onto a permitting track for realizing on the opportunity that we see in that's outlined in the PEA that was completed earlier this year. And then there's the regional upside. The drilling that's underway, 5,000 meters of drilling. Ideally, it'll be a little bit more than that when all is said and done in November. Testing what we think are really high quality targets to test these ideas that we're coming up with kind of in real time right now. We've got our full technical team with our advisors are working to develop and revise our targets. We have our drill plan mapped out, but we also have the flexibility to make changes if we come up with something that we think is really compelling and we want to do that. And then there'll be the work on the regional properties on Prospect Valley and Skooka North and communicating to you the progress that we're making on those properties. So there's a lot. The timing is really good. Obviously, I think as I mentioned, it's September 2025, so the gold price is very strong. This is a unique opportunity, and just leaving with one last slide to, I think, show how any of these catalysts could really help us. Because as I mentioned right off the top, we really think that we are in the Spencer's Bridge Gold Belt, an underappreciated opportunity and a development scale opportunity. When we look at Westhaven on a price to net asset value basis and compare it particularly to some of the underground North American gold projects, we currently are lagging, and a big job of mine and part of this presentation is to help with this, is just to get the word out and market the fact that this is a real opportunity. It's a buildable, developable, high margin, high grade underground gold mine that is a low capital cost at under $200 million Canadian, that can happen in the short term, with belt scale exploration upside to complement it. So thanks very much for listening to this. Feel free to reach out to either Sean Thompson or myself, and we'd be happy to answer any questions you have.